There is no reason why India's post-COVID-19 economic recovery should not be taught in business schools around the world. It is an achievement that no other country has been able to claim. Today, despite the COVID-19 threat still being around, India's stock market are booming. Investors now trust Indian markets. There is simply no fear amongst the investors when they put their fortune in our country, unlike the case with China. In China, money simply evaporates. China's markets are fast becoming a loss generation industry. China's SHOP index is one of the worst performing indexes among major economies. And this is good news for India. Let's find out how. Hi and welcome. You're watching TFI English, the national socio-political analysis arm of TFI Media Group. I'm your host Tribhuvan, and in this video I will tell you how Indian stock exchange is booming while China's stock market is tumbling to doom. Let's begin. The Indian economy is witnessing an unprecedented recovery and the stock exchange is booming. Many do not consider stock exchange performances a reliable indicator of how well the economy is progressing to strengths. But there is a general unanimity that a booming stock market simply cannot be indicative of a disintegrating economy. Investors are bullish in India. Foreign investors are bullish about the Indian markets. So something is going positive with the country's economy in general. The Indian equity markets have now emerged as the best performing among global peers on a year-to-year and year-to-date basis on the back of robust retail and institutional participation and better earning prospects. As per a report by Economic Times, Indian benchmarks have outperformed developed markets gauge MSCI World Index by 15 and 29% in the past 12 months and year-to-date respectively. Indian markets have outperformed developed market gauge MSCI World Index by 15% and 29% in the past 12 months and year-to-date respectively. The return correlation between India and global equities has declined to 61% from over 80% a few months ago. This means that the Indian market are increasingly growing independent of their foreign peers. Now, crests and troughs in foreign markets will have a lesser impact on Indian stocks. This, when seen through the context of Prime Minister Narendra Modi's push for an Atmanirbhar Bharat, is a huge achievement. Finally, the market capitalization of the Indian markets has increased by a whopping $1 trillion in the past year, despite the COVID-19 and its devastating economic impact the world over. Now, India's market capitalization stands at $3.2 trillion. This means Indian stocks are also the most expensive in the world with a valuation of 23 times financial year 22 expected earnings. On September 2nd, the domestic equity market witnessed yet another surge and moved past the key resistance level at 17,200 before ending above that. As per the Economic Times, the 17,200 mark had accumulated maximum call open interest throughout the week. Investors, both domestic and international, are upbeat about the strength of Indian markets and their ability to yield profits. A major reason for investors remaining bullish is the lack of extreme volatility in Indian markets, unlike the Chinese stock exchanges, which are affected by Xi Jinping's regulatory whims. In India, the Modi government has helped create a conducive, responsible environment for trading. This is leading to better earnings for Indian households and more foreign investment pouring in. Indian stock markets are increasingly reflecting increasing maturity in trading behaviors. Furthermore, India is earning a name for itself as a business-friendly destination around the world where government interference in the industry is not something that people have to fear. Given how some markets in Asia themselves are behaving, India's performance is nothing short of an overachievement of which everyone should be proud. People are trusting India with their investment and contributing to the country's market becoming among the most affluent in the world. The market in Asia, which we spoke about earlier, is none other than that of China. Mind you, China's market are huge. They were considered a benchmark in Asia, but that was during the years when China was booming. Currently, China seems to have directed all its energies towards scaring off investors and regulating the markets, leading to trillions of dollars being wiped out in the blink of an eye. Under Xi Jinping, the Chinese markets have grown very volatile and investors are turning to India. Instead, due to the steady and respectable position which our markets have come to command in the world. For example, China is cracking down hard on its IT and tech sectors. The value of China's 10 major tech companies had dissipated by over $800 billion until May this year itself. So China is not the country any tech company would want to invest in. Outflows from Chinese tech stocks due to the regulation in China seems to be resulting in inflows for the Indian tech companies, contributing to the Indian tech and tech sector becoming one of the biggest gainers following the coronavirus outbreak. In July, following China's crackdown on edtech sector, investors lost nearly $1 trillion as Chinese stock tumbled in fear of CCP's banned regulations and interference in the nation's business environment, which by the way is already polluted. Moving forward, what would be best for India is the Chinese crackdown on businesses to continue. The CCP is shooting itself in the foot by interfering in country's market. For India, domestic Chinese regulations are a blessing in disguise, as all of them are leading to the strengthening of Indian markets at a time when India's market are, in turn, growing independent of their foreign peers. India's gross domestic product grew at a record pace of 20.1% in the first quarter of financial year 2022, the highest ever GDP growth in a single quarter. Thereafter, the GST collection numbers increased on Wednesday for August showed a 30% increase from the same month the previous year and crossed $1 trillion mark for the second consecutive month. The latest GDP figures and revival of the business activity in India above the pre-pandemic level is a vindication of the efforts and strategy of the Modi government, and hopefully it will put the country on a multi-year double-digit trajectory for a prolonged period. The stock markets are upbeat about the same, and that is a good sign for India.